Needham channel viewers, and welcome to the 16th episode of Real Money Moves. I'm your host, Connor Gillen, and today I am thrilled to have with me Gaetano and Vito Ciambriello from AFC Mortgage Group. They are the dynamic duo behind the success of their family-owned mortgage business. In this episode, we'll be talking about what makes their family-owned company unique, dive into the latest on interest rates and market trends, and get some expert insights for first-time buyers in today's market. It's a can't-miss episode. So first and foremost, gentlemen, it is great to have you here. I really appreciate you taking the time out to come shed some insight for the viewers. So now, Vito, tell me about the history of AFC Mortgage Group. It's a family-owned company. Tell us a little bit about AFC's journey and where you guys are headed.
Yeah, our dad, Frank, started AFC Mortgage Group back in 1997. And since then, it was super small, up until me and Gaetano came and joined in June 2020. And then since then, have grown from, Gaetano was the third employee, I was the fourth, and now we're up to 20 full-time employees.
Wow, that's incredible.
Now, I do want to say, when we got the call a few months ago about coming up, we've got a book schedule coming up. We're here for, an hour, drove 2.5 hours. We appreciate you having us on.
Of course.
Wouldn't miss it for the world.
I love it.
So, AFC Mortgage Group, my dad's Frank Ciambriello. It's just a funny story. He put the A at the beginning back in 1998. It was my mom's idea. They used to have yellow pages back in the day, or something along those lines, to be at the front of the alphabet.
Oh my gosh, too funny. So he put the A in front of FC for Frank.
Good little marketing.
Brilliant.
Unbelievable. So my dad started the business, was a mortgage broker up until 2015, which means we would just, match a borrower and a lender. In 2016-ish timeframe, became a lender, opened up a couple warehouse lines of credit with different banks, started lending our own money. We got into the business in 2020, and shortly thereafter, we hired an underwriter too. So started underwriting loans in-house. So now our business, we work with 45 different banks, credit unions, and debt funds. So we originate, underwrite, process our loans in-house, and then we have one of those partners service the loan afterwards.
Great. So it's a smaller family-owned business, right? But you have the resources of a larger company, which is fantastic.
100%. Yep. And last year we've brought on 7 new salespeople, loan officers with experience in the business. We're still originating, and it's been a fun time, especially growing it together with me, Vito, my dad. Absolute blast.
So Vito, what do you think sets your family-owned mortgage company apart from other institutions?
Great question, Connor. There's really 3 things that set us apart. It's going to be our underwriting is in-house and processing is in-house. So everything's done at our office. The second is that we have a long-term family-owned mindset. So like Gaetano said, our dad Frank is still involved in the business.
Amazing.
We want all of our relationships or all of our buyers to build wealth over the long term. So really educating them is our third pillar, making sure that they understand every part of the process and that they're well aware of all the numbers, everything that goes into it.
Building wealth through real estate is the best way to do it if you look over the long term. And making sure we can educate home buyers, real estate investors of the benefits of buying real estate today and just sitting on it for 30, 40 years, what will happen when, you've seen it in Needham. Your grandparents bought their home how many years ago? I remember going to visit them. And now what it's worth and what it's done for them. So the education piece is crucial. And then also the relationship piece. My dad's still involved in the business.
Of course.
And every relationship we have, whether it is with home buyers, whether it's with our business partners, we're thinking long term. So we don't want to do just one loan for a client and then forget about them and leave them high and dry. We want to do 3, 4, 5 loans for them over their lifetime, build relationships to get referrals. So if you do right by a client, word of mouth will spread in a positive way. So that's what our goal is with, as Vito said, making sure we have those long-term view in mind to keep those relationships in a great spot.
That's amazing. And what I love too about a smaller time sort of operation, right, is you can call Diana, your guys' processor, and get her on the phone, or your underwriter, and you can get her on the phone. That's unbelievable. You can't do that with other institutions, which is awesome because you have the resources of a large company. However, you have that smaller time, like kind of mom and pop feel, which is incredibly charming, and attractive for home buyers that are kind of looking for a little help during what can be a hectic and chaotic process.
We might come talk about this later, but you're exactly right, where if you call, you're not getting put on hold. Somebody's going to pick up. We're going to get an answer. We're going to get right back to you. But each home buyer, one thing that we do that we preach upon is we love meeting clients in person or on Zoom.
Yep.
And we do consultations with every client. We look at credit, income, assets. We educate you not just on how much you're going to be approved for, why that's the case.
Yep.
Right? So we're breaking down everything there. And then we're going over different mortgage plan options with you in live time. Purchase price, loan amounts, interest rate options, terms of different loans, how much money you need for the down payment and closing costs. I'm sure, the education piece we talked about is so important, but you've probably heard stories or seen it where a buyer didn't even know they needed closing costs or how much they're going to be.
It happens, yeah.
So sitting down, making sure everyone's on the same page and educated about, one, the products that are available out there, the process. If a client is educated on what they can expect and what they need, they're going to be more confident when they're putting offers in.
Of course.
They're not going to second guess themselves. They're going to be able to be more aggressive. And if they have that education, I think it'll help them, with getting into the home that they really want or investing in real estate and starting to build a portfolio.
So Gaetano, I know it's early on in this year in 2025, but what trends are you seeing in the mortgage market this year already?
I think it's mortgage and real estate. And the Federal Reserve started cutting interest rates back in September of last year. And the 3 months that followed, mortgage rates have actually gone up. Part of it is because inflation looks like it's creeping back into the market. Some of the biggest trends we're seeing, you might agree, V, is, one, optimism. Since really December, the new year, people are optimistic, and they also might be understanding that interest rates are not getting back to 3%.
Right. They're more used to this sort of elevated rate environment than what we saw 3, 4, 5 years ago. Yeah.
6, 7% interest rates. And what's happening is you can only wait so long when life events occur to, let's say you had a death, divorce, new kid. Like we have a lot of, let's say, recent home buyers in the last 3, 4 years that have had a second or third child. They need more space.
Right.
You can't wait forever, though. Sometimes life events make you have to make a move that financially might not make the most sense, but you need it because you need more space and your family's growing.
Of course, absolutely, yeah.
So we're seeing that people are getting more comfortable with where interest rates are. Supply in the Northeast still very limited. Not a lot of land to build new homes in large developments. So in that case, I think we're going to see supply continue to be limited. People are getting comfortable with where mortgage rates are. Affordability is going to be an issue, just because with rates where they are on home prices. So you have to find ways to get around that, whether it's grant programs for first-time home buyers like down payment assistance grants, whether it's we have a lot of home buyers that'll buy a multifamily unit, live in one of the units, rent the other units out to help subsidize their rent payment.
Of course, yeah.
You have self-employed borrowers that might get turned down from a bank because they don't qualify because they deduct a lot of their income.
Right.
Take a ton of expenses and deductions. The bank looks at their tax returns and says you don't have any money to show.
Right.
There's programs for those self-employed borrowers, contractors, whoever the case may be, that can qualify without using tax returns. They look at business bank statements. So we're starting to see that a lot of these clients that have been waiting are now starting to re-engage with the market, and we're seeing activities, spur up. January was a little slow. Third week of January, we're now, pulling into the fourth. Things are really starting to pick up.
Excellent. That's great to hear, and I think you're absolutely right. I think borrowers are more optimistic, right? And they are used to. This is the environment, right?
Yeah.
You can't put it off forever, So to have a lender like your guys' selves who, will be able to help them achieve that in an environment where it's not that easy is super valuable.
One thing I'll add to that is the average or the median age of a home buyer has gone up from, in 2022, it was 33 to 35 in 2023, and then last year was 38.
Wow.
So really empowering those young people to educate them on what the numbers look like, what the process looks like, so they can comfortably move forward, confidently move forward.
Yeah, and it's been a little daunting, right, for those buyers because, again, not a lot of inventory, affordability is an issue. It's easy to get a little intimidated by it, but to know that you have some down payment assistance programs and other miscellaneous sort of tools that can help make it even just a little bit more affordable, which can be the difference in being on the sidelines and getting out there and looking for places.
There's a ton of different tools available for first-time home buyers a lot of people don't know about. First one, 20% down, is a misconception. You could put as little as 3 to 3.5% down. for buying your first home.
Yep.
Even if you're buying a second home and you're going to move into it, you could put as little as 5% down.
It's amazing.
Huge.
Yeah.
There's the down payment assistance programs, which will help cover that 3.5% to 5% down payment as well. A lot of clients, when they first come to us, don't know they could get gift funds from family, and a huge one is even borrowing from a 401k. So not withdrawing funds from it, which is where you're paying a penalty and a tax in ordinary income taxes, but borrowing the funds. Usually, depending on the plan, it'll depend. But you could borrow money from your 401k, pay yourself back with interest, and use those funds to make your first home purchase.
Wow, that's brilliant.
That's a huge opportunity.
That's a huge resource, yeah.
Mm-hmm.
Wow.
Especially in our age group of 28 to 32, you've been working, you've been putting money away, saving it in your 401k.
Yeah.
You can actually tap into that, use it to buy your home without having to sell anything.
So Gaetano, with all that being said, what is your forecast for the rest of 2025?
A couple of different forecasts. Last year, we saw home prices appreciate anywhere from 6 to 10% in states throughout the Northeast. And mortgage rates going into the year were mid-sixes. They creeped up a little bit by the end of the year to be like high to mid-sixes. Mm-hmm. So on the real estate front, I think we're going to continue to see home prices continue to appreciate. Limited supply and demand is still there. As Vito mentioned, median age of first-time home buyers creeping up.
Yeah.
But the amount of births in the U.S. going back to, let's say, the early 1990s has increased every year. So we're getting a larger population demographic-wise of people coming of age that are going to be first-time home buyers.
Right.
So demand's increasing. Then with mortgage rates, last year, at the beginning of the year, we're mid-sixes to start. They were talking about being in the fives by the end of the year.
Yeah.
So nobody's ever correct with that.
Of course.
But so you can't project where things are going to go. What you could do is look at where the market currently is. Inflation has been high. Rents continue to go up. And we're having a lot of conversations with first-time buyers that have never owned before about now taking, if your rent is $3,000 a month, last security is $9,000.
Yeah.
If you're buying a $500,000 home, $600,000 home, your down payment is $15,000 to $18,000. So it might make more sense to buy. You lock into a 30-year fixed rate payment. You don't have to worry about, rent going up every year and your payment getting more expensive. Principal interest is locked in for 30 years. Mm-hmm. So I think what we're going to see is a lot more people start to think long term about renting might not be the best option for them. And then we talked about it earlier. We're going to have a lot more people thinking, where can I make more income? They go to thinking about real estate investments. There's a lot of cash on the sidelines. They're saying the most ever. You're going to probably see some of that money pushed into real estate, which I think if inflation continues to go up, real estate's a great hedge for it.
So what strategies are you using to help first-time buyers in this market, right? We've talked about affordability being an issue. We've talked about inventory being an issue. And you're right, a lot more people around our age demographic are thinking about buying their first property. Granted, the market conditions are tough. What strategies are you implementing to help these first-time buyers get offers accepted and, buy their first home?
That's a great question. And I think a lot of that starts with the education component of letting clients and first-time home buyers know where the market currently is. Letting them know, here's where the market is, and then here's what you need to do to get an offer accepted and be successful. Because we only win, you and us, if our clients win in getting the right home, getting the right place. Now, taking a step back further, we need to talk education about their actual loan profile. So their credit, their income, their assets, how much they can be approved for. The maximum amount of what they qualify for is usually different than what they can actually afford per month. Meaning we might have a client that can qualify for an $800,000 home, but when you look at their monthly payment, they qualify for $800,000, but they probably only want to pay $550,000, $600,000 for a home because that's what they can afford per month based off of all of their debts and other expenses.
Right, and property taxes, insurance, all the other components.
And I'm talking too about car payments, car leases, going on vacation, going out to dinner. You don't want to have a client buy a house, be house poor, and then regret their decision.
Of course,
eat ramen every night.
Yeah,
unless you like ramen.
Yeah.
But so having them understand that is a great starting point to understand the market because they have to know their specific profile of they can qualify for $800,000, they can afford $600,000. So maybe they need to look in this market at homes in the low to mid fives because you're probably going to have to offer above asking on a lot of homes because there's limited supply in inventory. So when you're talking about specific programs or let's say specific ways to enhance your offer, what we're talking to clients about is shorter inspection contingency periods. So instead of 7 to 10 days, can you do it in 3 to 5? Now that's important to work with an agent who has a great inspector or 2 or 3 inspectors that they consistently work with that can come out on a moment's notice.
Right.
If you work with the same inspector 10, 15 times a year, he's going to be more willing to come out for you in a pinch.
Of course, yeah, absolutely.
So that's important to put the right team together. The second thing is if a client's putting down 10% or more, especially if they're putting 20% down on their first purchase or at any purchase, we talk to them about waiving their appraisal contingency and how the numbers will affect their down payment, their cash to close, including closing costs, and their monthly payment. There's some cases where if you waive an appraisal contingency and the house under appraises, it doesn't affect their monthly payment, doesn't affect their cash to close. So if they're putting a large enough amount of money down, the appraisal sometimes doesn't matter. We had a similar situation on a condo purchase recently for it was a smaller 400K purchase, putting down 50%. He didn't have to have an appraisal contingency, completely waived it. And then in regards to getting pre-approved, it's so important to get documentation up front, make sure you complete a thorough application, and if you have any issues with your credit that you know of in advance, start preparing for when the time comes to apply, that you can work those out. And I always like to say to clients, even if you're not ready today to buy, have the conversation with us. You can apply and we can do a pre-approval based off the future. So it's not a snapshot in time.
Right.
So if you're applying for a loan today and you only have $10,000 in your bank account, but you know you'll have 50 in the next 3 months, we could pre-approve you based off the future and then just make it contingent upon that.
Right.
And then when it comes to loan terms, when you're putting offers in, shorter closing dates and contingency periods are so important. So the standard of 30-day closings, maybe you need to cut it down to 21 days and have a mortgage contingency of 10 days instead of 21.
Right.
And that's what'll make your offer stronger. So important to work with a team that works together. Real estate agent, lender, attorney, so that you could come together and move quickly. Like you said earlier, you don't want to have to work with someone and when you call up a line that you're on hold. Communication is so important, transfer of information. So having the right team in place is going to help you with getting an offer accepted and then making the process smooth and seamless.
I think that's a great point.
Yeah, I think that's the biggest thing. I don't know if you got anything else, but
Yeah, it comes down to having a game plan. Really, if you need to offer a little bit higher to win the house, go with you, the real estate agent, find out the game plan, and then knowing the numbers, making sure that every buyer understands exactly what the offer means, what the monthly payment means, cash to close.
We were driving up today, clients looking at a house, $575 is the listing price. To win the house, they might have to go to $590, so $15,000 increase.
Yep.
For them to understand that every $5,000 increase in purchase price based off their scenario is going to cost them $27 a month. It's $84 a month to win that. Instead of saying it's $15,000, it's $84 a month.
Yeah, the perspective, right, in the education, right, of knowing your numbers. Boom. So that, it really isn't that crazy to go from $575 to $590 if it means winning the deal.
Yeah.
If it's your dream home and you're going to spend the next 30 years and have kids and a family, $84 a month, some people
well worth it.
Well worth it. Yeah.
Well worth it.
But $15,000 might sound like a lot more money, and then when you break it down, it's like, oh wait, this is actually more manageable. The education component makes the client more confident and can make that jump.
So Vito, tell me, how do you help your clients understand what different types of loan products and programs there are out there?
Great question. The biggest thing is really doing a deep dive and understanding our clients' needs. So where are they looking? How much are they looking to put down? What is their incentive behind buying? Once we figure out all of that, we could really dive into, all right, they're looking to buy this home, like Gaetano said, for their family to live in for the next 30 years, or is it going to be an investment property for them, something they're looking to flip or hold on to for rental income? So it goes into understanding their needs, doing a deep dive, and then showing them all the different options that we have that could fit their needs.
And so what are some of those products and programs that you see that are kind of commonplace with your borrowers?
I think that before I answer that question, Vito hit it on the head. Most clients want to figure out 3 things. What's your ideal monthly payment? Yep. What's the ideal, and ideal payment in regards to you not being house poor. So where you can live comfortably.
Right.
The second thing is, what is the ideal purchase price you need to then look in so that you could go out and start looking at homes and be confident in the homes you're looking in, that you're going to be able to afford them. And then the third thing is, how much money are you going to need to make this purchase for the down payment and closing costs? So once you have those three questions answered, then we could dive into different mortgage programs that help clients with their specific scenarios, whether it's down payment assistance, forgivable down payment assistance, or down payment assistance that's a full-blown loan, whether it's conventional loans or FHA loans for first-time home buyers, as little as 3 to 3.5% down. Now, if you're going to buy a multifamily, same thing. You can put 3.5% down to 5% if you're going to move into it.
Which is great.
It's huge.
Yeah.
We have a lot of clients this year that are buying investment properties without verifying their income. So they're putting down 20 to 25% on a single family all the way up to 4 units without verifying any income. No tax returns, no W-2s, no pay stubs.
Wow.
So that's a huge opportunity for those that maybe had a down year or they don't have any income to show to start buying real estate investments as well.
Right.
We talked about the self-employed borrowers earlier. Instead of showing tax returns, they're showing 12 to 24 months of business bank statements. That's a huge opportunity in this market. And then also, you get real estate investors that want to, you work with a lot of developers yourself.
Yeah.
You get investors that maybe don't even want to do ground up construction, but want to do renovations on properties. So there's fix and flip loans for investors. Or you get the couple that wants to buy a house. They don't have the money to renovate it, so they roll the renovations into the loan to do a renovation rehab.
Right. Yep.
Fannie Mae home style loans are huge, and FHA 203K loans.
Yep.
So the important piece of that is, let's say you want, just to break down numbers for anyone that's listening, is if you buy a $600,000 home, it needs $150K of work. Your down payment's only going to be, let's say, if you're doing a Fannie Mae home style, 5%, 30 grand on the 600. Because you're going to roll the renovation into it as well, you're putting now 5% down on 750, which is 37,500 versus having to pay for the 150 out of your pocket.
Right.
For the renovation.
Unbelievable.
No brainer.
Yeah, no brainer. Absolutely.
Once you complete the work, now you need to have a licensed and insured so you can't do the work yourself as a borrower.
Right. Yep.
You need somebody that's licensed and insured. But once you go through you might need a HUD consultant depending on the size of the job as well, and whether you go FHA or conventional. But once you complete the project, you might not have mortgage insurance if you're going conventional. You're locked into a 30-year fixed rate loan, so it's not going to adjust on you. You know at closing what your payment's going to be in the future.
Right.
And it opens up the opportunity to buy different homes, because you probably know this. Most first-time home buyers, it seems, want to buy something that's move-in ready. But sometimes there's houses that have a lot of opportunity. They're sitting on the market.
Yeah, they're sitting on the market, and you inject that equity and renovate the property, and it's a great opportunity. It's a powerful tool that's underutilized, in my opinion.
100%, and you could be on like House Hunters, change this show into house for fix and flip. But it's a huge opportunity for people to create the home they want.
Yeah.
If it's not on the market.
Yep.
If they have the vision to go in and check it out. So that's a huge program too that clients are using. We're doing a couple right now, and it's funny because a lot of first-time homebuyers that aren't real estate investors or real estate people might not have the vision right away, but when they look back, like, couldn't even believe that this is what was possible.
Right.
And that's an awesome feeling.
Amazing.
Yeah.
Well, gentlemen, thank you so much. There was so much valuable content for the viewers here, so I really appreciate your time, appreciate you coming out. And if anyone needs any sort of help or guidance with pre-approvals, offers, borrowing, anything like that, make sure to reach out to these two.
Anything real estate related, even investments, student rentals, we didn't even talk about that. We love that space.
Yep.
We'd be happy to connect with anyone, share insights on what we've done, and just be a resource.
Love it, gentlemen. Well, again, thank you so much for being here. I really appreciate it.
Thank you for having us.
Thanks for having us,
Connor.
Absolute pleasure. Absolute pleasure. Thank you for tuning into this episode of Real Money Moves. Whether you're looking to buy, sell, or just stay informed, myself and the gentlemen at AFC Mortgage Group are here to be your trustworthy advisors. If you have any questions or miscellaneous real estate needs, please reach out to us at the contact information on your screen. It is a joy for us to connect with fellow Needham residents and Needham channel viewers alike. I'm Connor Gillen from Real Money Moves, and I'll see you real soon.